We don't have a lot of economic data, so actually markets and yourself need to kind of hang on the success or not of a lot of these T-bills to see where the market is going.
Yeah, good morning. So I think the backdrop here is we are adjusting slowly to a very significant fiscal stimulus that has been, only become clear over the last 2 months. This is reflected in more Treasury insurance, and we're going to see more of that coming. And we've seen over the last few weeks rates adjust to this picture. I think this is mostly a real rate story. So I think this is mostly about like growth stimulus coming on the back of that, and also deficits that are larger than we would have expected otherwise, and that's starting to be factored into the rate picture. Okay,
Jean, let me bring you over to probably my chart of the day, which is the U.S. 10-year yield. I don't know whether it's still in a range, right? So we're currently at 2.87, and we were showing that. Is this kind of like a trend? We brought it back to the 1980s, right? So you kind of see that yellow line starting at 1980s, and then it's just going down. What happens from here?
So I think we are seeing like a movement upward on rates from extremely low, historically low levels, some steepening of the curve. I think this is consistent with the backdrop and what we've been learning about. At the same time, I think we don't want to lose track of the fact that there's massive amount of savings globally. We are like on IMF forecast, it's 22 trillion of new savings that will come to, we'll need to find a home in 2018. So that's not surprised that you see this issuance finding some demands, and I think this is like an equilibrium forces that's gonna, we're going to see rates going up, but it's in a contained fashion.
How many times do you believe that the Fed will hike? So this is my Fed hike probability chart, and you can see the rate hike odds tumbled a little bit. So this is the number of rate hikes you can see kind of on the margin on the right. As market volatility kind of took hold in the last couple of weeks, that kind of ebbed and flowed a little bit.
So the market is pricing just below 3 hikes for 2018. I think with the growth impulse we're getting now, which will become even clearer over the next few months, I think 4 hikes in 2018 is a reasonable expectation at this stage for the Fed. It's going to be interesting to see what comes out in the minutes. We've seen the inflation print coming out and the wage data coming out, which will not be fully reflected in the minutes. So I think we're seeing like a slow adjustment where I would expect the Fed to start like communicating 4.